Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions Podcast, where we believe most high net worth individuals and their professional teams struggle to find great capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is the best way to exit your highly appreciated assets tax deferred so you could create, preserve, and grow your wealth. I'm your co-host, Pearson York, filling in for Brett Schwartz. And each episode, I'm joined by some of the best wealth, business, real estate, and leadership individuals in the world to share ideas, deal stories, and inspirations so together we can make complex tax deferral strategies simple and passive income plans achievable. We're also streaming on Expert CRE Secrets, the Capital Gains Tax Solutions YouTube channel, and Kingdom Luxury Realty Facebook channel. And I'm super excited about our next guest. He's been in the tech space for a long time and sold his company and now moved into a marriage of tech and finance. And so we're going to have a fantastic conversation with my new friend, Yaakov Zar. Yaakov, how you doing, man?
How's it going? Good to be here. Thanks for having me.
Yeah, man. It's awesome. So tell me, how did you get into your world?
Yeah, so my background is in enterprise software. So previous to starting Lev, I had started a company called Dispatch. We were building tools for home service businesses like plumbers, electricians, appliance repair companies. We started that business back in 2013, and we grew that company and sold it in 2018 to a group called Vista Equity Partners, which is a private equity shop that buys software companies. And shortly thereafter started Lev after an experience in the mortgage space, which I'm happy to talk about.
Yeah, so dive into that experience. Yeah. I want to dive into that experience. Before I do, well, let's back up really quick and just do one more thing. Tell me a little bit about, I believe everyone's been given some strengths and spiritual gifts, superpowers, whatever you want to call them. What are one or two strengths or superpowers that you've been given that have led you to be successful today?
Wow, that's a good question. I work really hard. I think that's important is working really hard, and I try to learn a lot. So I read a lot and try to understand how different things work and how they can be applied in various scenarios. And the real gift I've been given is an amazing family and wife who supports me in everything I do. And, God has been watching closely.
Yeah, awesome. So that hard work ethic has just let you to drive. And then you mentioned something else that's interesting too, and that's how you take concepts and apply them and then marry them.
Yeah, I think it's really important. I think that everything is ultimately the same in some sense, and it's interesting to see how different industries approach different problems in certain ways, whether it's with technology or people or process, et cetera, and how they can cross pollinate that how that knowledge can be cross pollinated in those processes. And if something works really well in one industry, it might be worth exploring how it could apply in other cases, or more importantly, the classic Harvard Business School concept of studying case studies as the primary way of learning. I think that's really important in businesses to see what other people have done that worked or not worked, especially, and figure out how it could be applied in new scenarios.
Yeah, absolutely. That cross pollination of problems, solving solutions and all that kind of stuff is, I think, is vital to any sort of thriving business. And some of the best ideas come from
absolutely
industries.
Yeah, I think we see it especially now, like with the venture market and stock market, funkiness that's happening, and we've seen really hot markets get in sudden pauses before, and being able to study that and learn from that and learn what works for different people, I think is really valuable.
Yeah, absolutely. I want to dive into that a little bit. I'll kind of circle back to this concept
Sure.
a little bit later, but so tell us about your experience.
Oh, sure. So my wife and I, we were living in Boston, and I was working on starting Dispatch, or we were working on building up Dispatch, and we learned about this first-time homebuyer program where you could buy a house with 5% down, which is a pretty amazing concept. And we went through the whole process. We were a couple of weeks away from closing on this amazing apartment we found. And I get a call from the mortgage guy, and he's like, "I'm sorry, your building was rejected by the FHA 7 years ago because of some issue with the roof." And I'm like, well, that's annoying. And I thought it was nothing, but it turned out that it was actually a showstopper for this particular loan we were doing. And obviously that was pretty frustrating. And I thought, like, there's got to be a better way to get a mortgage, and it shouldn't be a last minute thing that you find out. So I took classes. I became a licensed mortgage loan originator, and I wanted to start a online mortgage company. Things just were way too busy with dispatch, and I kind of put it on the back burner. And after we sold the company, my wife and I had moved back to New York. We're both from Long Island, and I helped a nonprofit that we're very close with to refinance their building. And I learned about the process of commercial mortgages. And I mean, I'm sure you know this, but it's completely different world from a residential mortgage. The processes are different. The transactions are more complex. Lenders look at every deal very, very differently. And I thought, there's got to be a better way to do this. And I decided to focus on building a technology company that helps commercial real estate owners and investors get financing for their properties. So we started this company at the end of 2019.
Yeah, that's and I want to dive super deep into that. And before I do, though, I want to talk a little bit about when you sold your business, your liquidity event. So did you have a pretty significant capital gains tax on that sale?
Yeah, so we for most of it, we actually were able to take advantage of the QSBS tax rule. Are you familiar with it?
No.
Yeah, there's a concept where if you start a business, you get you pay effectively no tax on a significant portion of it, and we no capital gains tax on a significant portion of it. So we were able to take advantage of that for a lot of it, and obviously constantly figuring out what the right tax solutions are for on a day-to-day basis.
Yeah. So how does that you call it a QSP?
QSBS. Yeah.
QSBS. Okay. So how does that work?
It's like a IRS code to encourage small businesses. I don't know the origin of it, but it's a interesting concept where you pay like up to a certain amount of capital gains tax is completely deferred. Not deferred, I guess. Just you pay zero capital gains on a portion. Qualified small business stock, it's called.
Huh.
Yeah.
QSBS. I'm writing that down.
Yeah.
Interesting. Okay. So one of the things that we do over here is we use what's called a deferred sales trust, and what's cool about that is it works for businesses, but it also works for highly appreciated stock or commercial real estate or primary residence or crypto or whatever, any highly appreciated asset. And if it doesn't qualify for something like a 1031 or like a QSBS or the 121 exclusion, or it's above and beyond, you can use the deferred sales trust. And essentially what you can do is you can sell a highly appreciated asset, and then you can it's kind of like 1031ing into a self-directed IRA account. So it gives you control over timing. It gives you control over and it's like kind of agnostic as well. So it's like with a 1031, you got 45 days to identify a property, 180 days to close. With this, you have no time limits. You have no like-kind constraints. So you can sell a stock and you can go into business, or you can sell a business and go into real estate, stocks and bonds and crypto, or you can sell crypto and go into a business venture and real estate. It doesn't matter. You can do whatever. And it's super flexible, interchangeable, and all that kind of stuff. And so it's a phenomenal tool that can be used when you have those big liquidity events.
That's awesome.
Yeah, it's really cool. We have a mastermind every Friday at 10 a.m. Pacific, 1 p.m. Eastern. I'll invite you so you can come and ask questions, bring the CPAs and check it out. It's a weekly thing. So, and if anyone else is interested, you can go to capitalgainstaxsolutions.com to learn more about that. But it's a phenomenal tool. So I'll definitely do that for you. Yeah. So there's my shameless plug for the episode. So back to you. So tell me a little bit about what your company does, how it operates, and how it works.
Yeah. So commercial real estate owners and investors come to us when they have a property that they need to refinance or that they're about to buy, and they typically need a mortgage for it, and they might have a couple of relationships with lenders or not, and we're here to make sure that they get the right financing solution for exactly what they need, and we want to make sure that they have the absolute best experience. So, like I mentioned, there's thousands of lenders out there for commercial real estate. Every single one of them has completely different products with very different terms, and each of them has different underwriting guidelines and preferences on location and asset type, and all the different factors of what types of real estate they want to lend on. And our job is to help match them to match our clients to the right lender. So we have thousands of lenders within our network that we work with, and we're able to understand the asset that our client comes to us with and what they're looking for, really understand their needs, and then get it matched with the right lender, and then help them close that transaction digitally.
So are you guys like eHarmony for commercial lenders?
That is a good way to put it. Sure. Love that. Not Tinder. We'll take Tinder.
Well, Tinder, you just swipe left or swipe right. Like
Right,
eHarmony, right?
It's more romantic.
Yeah, you got like the whole thing you got to go through, right? Where you got to put all your data in. I'm assuming, right? That would be how you have to do it. Like in my head, when you just described it, I was like, okay, so I want a retail building. It's 50,000 square feet, right? It's a value add deal. I need to put $2.5 million into the property, right? I'm going to increase, the leases from a 60% vacancy to almost fully occupied, right? I'm going to increase NOI, and it's going to be worth X amount when I'm done, right? Who's lending on that, right? And then you have all of those lenders, and then you blast it out to every single one of them, and whoever comes back with best terms for the thing, that's
exactly right. We don't blast it. We do like you said, eHarmony style romantic matchmaking, but exactly right.
Awesome. So that's a sweet product. So is it live?
Yep.
Mm-hmm. Where can people find it?
We did about $1 billion of loans last year.
Wow.
So we are at levcapital.com, levcapital.com.
Right down there on the bottom of the screen for you guys. So levcapital.com, and you can go there and get that checked out. So how's it work? Walk me through the process. Do you have to sign up? Do you pay a subscription fee? How do you guys make money on that?
The borrower comes to us and gives us a couple of pieces of information. Typically, they're sending us the rent roll of the property, the address and basic details, and then some information about them. And we use that to sort of put together an analysis of that, of what makes sense in terms of financing. We run our match and identify the right lenders, and within usually a day or two, maybe a couple of days, the borrower gets a quote matrix of different options and different scenarios for financing that are available to them, and they're able to review those, negotiate them, and then we move to getting the deal closed. We only get paid if the deal closes, so we take a small fee based on the transaction closing.
Now, do you guys also get do you guys get any sort of like referral fee or anything like that from the lender at all?
We don't. We very specifically don't. We do work with a lot of investment sales brokers and tax advisors and other people in the sort of commercial real estate ecosystem who give us deal flow, and we have some referral programs on that side with them. But from the lenders, we don't. Our customer is the borrower.
Are you guys underwriting the deals, so when you bring them to lenders, they're already like pre-screened and pre-underwritten?
Exactly. That's our job.
Okay. So
we want to make it as simple as possible for the borrower, for the lender to analyze the deal and make sure it's a good fit for them.
So you guys are collecting all of the loan docs up front and everything that is needed to create a file, and then you send it out.
Right. We collect all the due diligence for the borrower up front and try to put together the most complete package possible for the lender.
Have you guys figured out a way to streamline that process at all?
We've built a bunch of things that make it better. We have an online portal where the borrower sees a very clear checklist of what is missing and what is, depending on the level of urgency of what we need in order to get the deal out to market. They get real-time updates on requests that come in. They get reminders as based on their settings of what's missing and what they need to provide. So there's a lot that we've done there. We're building even more automation. So borrowers could drop in raw files and we can parse them and identify a rent roll and pull all the right pieces of information out without making our borrower fill out a form with like 100 questions of like, we could ask a million questions about every property. What's the NOI? How many units, right? Like we just parse the rent roll document that the borrowers give us. So there's a lot that we've built there. There's a lot more to build. I think we're working on some other things where you could log in with your bank account and we could pull in information, and there's a lot of automation happening.
Yeah. Okay. So here's the other concept that I want to kind of just dive into a little bit.
Sure.
I'm seeing a lot of this idea of tokenizing real estate loans, or with debt or equity, or parceling out the the property rights, right, and loaning on certain things. Are you guys entering into the blockchain space at all?
You're talking to the wrong guy. I'm not a crypto believer.
Not a crypto believer.
I'm not a big crypto believer. I believe in some use cases. I think that in commercial real estate, there's the challenge that we have with sort of like sharing ownership in assets, et cetera, is less about the technology of tracking the ownership, which is where blockchain adds a lot of value, and more in just like deals making economical sense. And I think that's the concept of crowdfunding in commercial real estate in general. I mean, I think the market's pretty big at this point, but in terms of like it as a part of real estate investment as a whole, it's still pretty small. So I think there are some interesting things to be done there. I haven't seen an application of crypto in CRE that's gotten me super excited yet.
Gotcha. Okay, so that's not necessarily something you guys any sort of focus, but antennas are up, and if you see something, okay, you'll
For sure. Yeah, absolutely. We have probably the leading technology in commercial real estate finance of any company, and we probably invested I don't know if more, but definitely invested smarter and better in that space than anyone in the industry. So I think we have we're ahead of the game. We're ready to be where we need to be.
So are you guys currently live? You've done over $1 billion worth of loans last year. Are you guys and now you're streamlining? Are you guys planning to move into like the single family hard money space at all, or anything like that?
We do some transactions. We've done a bunch of single family transactions, mainly on portfolios. It's a hot space, and we're definitely excited about it in general. We have a lot of deep relationships with lenders who are really experts there. So when we have clients who are active, we definitely have the right relationships to get them engaged with.
So let's say I have a portfolio of 30 properties, right? That I want to do I don't know. I just want to do like a consolidation loan or
Sure.
a portfolio loan or something like that. Could I use your portal?
Yeah, absolutely. Yep, come to us. We'll gather some information about the properties, tell us the addresses, and we'll get you quotes usually within just a couple of days.
Nice. And now, how do you guys create? Do you create any sort of like marketplace, like competition within the lender, so that we get the best rate?
That's what we're here for, right? We want you to have a friendly partnership with the lender that you end up working with, not fight and negotiate for terms with them, which is what we do. So we do that on your behalf and allow you to get term sheets and be the good guy and get the deal done with the lender of your choice. And we work really hard to negotiate amongst lenders to pick to get you to the best options. Yeah.
Interesting. Okay. So do you guys then have a criteria that you have to fit in order to basically use your services? A minimum qualification?
We have some general internal guidelines just to make sure that we don't set false expectations with our borrowers. So if someone comes to us with a $1 million property and they're looking for $990,000 loan, we let them know that it's unlikely that it'll happen. But we've closed transactions as small as $500,000 and as big as $100 million. So we work across the spectrum.
You guys do international?
We don't do international. No, we're just U.S. We're just doing deals in the U.S.
What if a company has U.S. like holdings and like outside offshore holdings? For example, a Delaware corp that does a lot of agricultural stuff in Colombia.
Sure. As long as the property is in the U.S., we can get financing for it.
Gotcha. Okay. Any plans to go international?
We think about it often. It's just interesting to see how big the U.S. market is in comparison to the rest of the world in commercial real estate in general, and especially in commercial real estate finance. In the U.S., it's much more normal to have higher leveraged assets. So when you run like a comparison of the total U.S. commercial real estate debt and the rest of the world, it's funny to see how like most countries together are like the size of New York, right? In terms of like market size for CRE finance. So we have a lot to do here first.
So basically, Americans are just way over leveraged.
You know, over leverage, you know, who knows? See how it goes.
Okay, what about? I'm going to switch gears on you a little bit and just kind of talk to you about what your thoughts are on market conditions and what are you guys seeing out there right
now? I think that we've seen sort of a lot of people are waiting and seeing what is possible. We have a lot of transactions still closing and moving pretty quickly. Interest rates are going up a little bit. I think that's pretty well known across the board, and most lenders have adjusted their pricing to accommodate for that. But deals are still getting done, and there's still in the history of commercial real estate finance, the rates even up from where they are now, and they've already gone up, are still historically pretty amazing. So we're not in the all-time low that we were at a couple of months ago, but there's still a lot of meat on the bone, I think, and still a lot of deals to be done and money to be made.
So are you guys worried about any sort of like recession or anything like that coming through? People being over leveraged, 2008 again, or anything like that?
Yeah. I have some general concerns, especially about the tech market and venture market. I don't think we'll be in like a absolute disaster situation like we have been in the past, but I think it's going to be a rough couple of years, and I think that a lot of people who push the boundaries in leverage in the past couple of years are going to have some tough situations that they need to get out of.
So dive into that a little bit. So someone's over leveraged, right? Like what if someone's cash flowing their property right now and they're kind of, maybe got a little bit of leverage on their property. Tell me where the breakdown is going to happen.
I think the issue is that cap rates are going down, or excuse me, cap rates are going up significantly. And, if you got a loan on a property that was worth $1 million and the cap rate was 4 at the time, and now cap rate is 6, I'm not good enough at the mental math, but your property is worth like $800K or something now based on that. So you might be significantly underwater on your loan. Now, if you don't have recourse and you want to let it go and like you'll lose your equity, fine, that's your prerogative. If it's a tougher situation or you think that values are going to go back up and you want to do what you can to fight and save it, I think it's important to get the keep an eye on that and keep an eye on the market and make sure that you're maintaining good relations with the lender and figuring out a business plan that is sustainable. And I think we saw some of this at COVID, and it was sort of false preparation, which is, I guess, better than not being prepared. But a lot of people during COVID were locking down and getting ready to figure out what to do when the loans came due. And I think now people should run a similar analysis and take a look at their books and see where do they have. Maybe they're under leveraged somewhere and can put some more equity into other deals, or there's properties that they want to let go of, or just wait and see. I think for now it's generally wait and see, but I think it's good to be planning a couple of different scenarios.
Yeah, no, that makes a lot of sense. So, okay, cool. Well, we are kind of coming up on our time here. I want to get you into the lightning round. But before I do, so where can people connect with you?
Yeah, you could find me on LinkedIn. Yakov Zar, YJ Zar, I think is my LinkedIn thing. and on our website, levcapital.com.
Cool. All right. So if you guys want to connect with Yakov at LinkedIn, you can go find him on LinkedIn. He's pretty easy to find. Just type in his name. He'll pop right up. Or if you'd like to do the whole .com/in/YGZAR, you can find it.
YJZAR. Yep.
YJZAR.
Yep.
Awesome. Okay. All right, Yakov, you ready for the lightning round?
Absolutely.
All right. What is your favorite leadership quote?
Wow. I don't have one. Pass. Can I pass on in lightning round?
Pass. Okay.
I have one. I just don't remember it that well.
All right. If you think of it, come back. What's your favorite? What is your favorite book?
I am rereading The Big Short, and it is incredibly exciting.
So you are gearing up for a major recession.
Getting
You're
ready.
going to do some default swaps
Yeah.
and buy bad loans, huh?
Yeah. It's interesting to read and learn about. Yeah.
Are you applying any of those concepts right now?
I think it's just interesting to see the extent to which like no one knew what they were doing. I think that's just like, it's a very interesting thing to see. Everyone thinks that someone else is, the gatekeeper or protector of it, but just no one was. And that ended up being pretty bad.
So like, are things in place now that are going to keep that from happening again? Or do you think we're going right back to that with kind of what's going on?
I don't think things are in place in the venture market, for example. And I think that we've seen the effects of that pretty drastically. And I think we're going to see a lot of technology companies have to make pretty aggressive cuts.
Interesting. Yeah, that's really interesting. So that might be the bubble then. Another .com versus 2008.
It could be.
Marriage of concepts, right?
So exactly.
Taking from what one industry did and just applying the solutions, right?
Exactly.
And circling it back. Okay. What are you most curious about right now?
I am learning a lot more about the securitization market and trying to understand how it works and what the opportunities for commercial real estate loan securitization are.
Hence The Big Short.
Yeah, that too.
Right on. All right. Yakov, any final words?
No, it was great to meet you and be a part of this, and thanks for having me. And hope I can help your listeners get financing. We're always here.
Absolutely. So, guys, if you're interested in that, go to levcapital.com. You can learn all about the commercial lending platform, eHarmony.
eHarmony for commercial real estate lenders.
eHarmony for commercial real estate lenders, and get some good rates and some good deals. And if you guys are interested at all in learning more about the Deferred Sales Trust, come to our mastermind every Friday, 10 a.m. Pacific, 1 p.m. Eastern. You can find that at capitalgainstaxsolutions.com. You can sign up for it there. And or if you have a liquidity event that you want to talk about, see how that deal would go, go to capitalgainstaxsolutions.com, and you can learn all about the Deferred Sales Trust there, or any other capital gains tax solution that might be a solution for you. You can learn that there. So, Yakov, thanks again, man. And Yakov, thanks again, man. And we'll catch you on the next one.
Awesome. Take care, brother.
Awesome. And thanks again, everybody, for listening to another episode of the Capital Gains Tax Solutions podcast, where, as always, we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy such as the Deferred Sales Trust is the best way to create, preserve, and grow your wealth. Please rate, review, subscribe, share, like, notification bell, all that good stuff. And we'll see you guys on the next one. Yakov, thanks again, man. It was a pleasure. And we'll
thanks a lot. Bye.
Have a good one.